One of the most important parts of our Focus on Retirement Blueprint plan is our tax distribution planning project. Why? Well, as I like to say, it's not about how much income we generate in retirement, it's about how much income we get to keep in retirement. Think about that for a second. So, as part of our Focus on Retirement Blueprint plan or our full service clients, what we do for them every year is we get their most recent tax return uploaded into our software and do a whole tax analysis as to what their effective tax rate is, what their margin tax rate is, how close they're coming to having their Social Security taxed, or if it's already taxed, how close they're coming to the next threshold of the 85%, or maybe it's already there. Does it make sense to do a Roth conversion? Is our Medicare Part B, are we going to get hit with the surcharge? What about Part D? So these are all the things that we do for our Focus on Retirement Blueprint plan clients or our full service clients. Tax distribution planning, tax planning, understanding what is going to happen. My kids are driving me crazy. I need an additional $40,000 distribution from my 401k plan. Well, that's no problem to get you the money, but what does that mean from a tax standpoint? How much money do we withhold? 20%, 5%? Do we not withhold anything? Is that going to bump us up to make, again, like we're talking about our Medicare surcharge, our Part B, our Part D premiums? It doesn't mean that we shouldn't take the distribution, but it does mean that we need to understand what the distribution is going to do from a tax standpoint. Also, when you have different accounts, you have IRAs, you have regular brokerage accounts, you have Roth accounts, whatever accounts you have, we will look to make sure that we're taking it from the proper accounts. What that's called is, that's what they call in the profession, a fancy term for saying that is tax lot accounting, which really just is a fancy way of saying we're going to do an analysis to figure out what's the most tax efficient account to take it from. So what we do, again, I mentioned the software, and I'm going to do in this video right here is kind of show you in our video series of what it's like to be a client, what to expect as a client of ours. Is we're going to take you through the software and show you what the report looks like, what you can expect to get from us. So when we start working on this project together, the first step is you email us your most recent tax return. We then, in return, upload the tax return into our tax planning software, which then spits out a report to us called our tax report. So this is a sample client, John Smith sample and Sally Smith sample. This is their 2022 tax return that we uploaded. And here's a really simple report that we give to you, which explains to you what all the line items and everything on the tax return means. Because a lot of people don't really understand what they mean, and it's a lot to go through. So this is just a really quick, down and dirty overview of what the tax return you sent uploaded to us. We've done nothing. We've done no projections. This is just a summary that you get from us outlining what's going on. So you can see the top here, you've got total income, $80,225. So this is the report that we look at, and here are some key figures. So this report for John Smith sample and Sally Smith sample, probably should have made that shorter. It's a wordful to say.
That makes sense.
But anyway, for our sample clients, we'll go with that, right? For our sample clients, their total income was $80,225. Their adjusted gross income was $80,225. $28,700 of deductions. Taxable income is $51,000, total tax $4,902. So whatever your situation is, from what your tax return tells us, this will be able to show this to you. Filing status is married filing jointly. Your marginal rate, any tax exempt interest, again, taxable Social Security. This is just an overview of what you get. And what this shows you here is that based on their income, they're in the marginal tax bracket of 12% because they've earned $44,275. Medicare Part B and Part D premiums, which I alluded to earlier in the video, is telling you, okay, if our threshold is 0 to 206,000, then that means when our Medicare Part B and Part D premiums could be subject to an additional adjustment. Like we see down here, if our income is 206 to 258, you would have a $70 Part B adjustment and a $13 Part D adjustment. So I'm not going to go through the whole thing because you get the idea. The other thing that we do which is really cool.
This is incredible, isn't it?
That we do is we're able to come in here and do scenarios. We're able to model and say, okay, I'm looking to do a Roth conversion. We've all heard that it makes sense to do Roth conversions. Well, what does that mean? Well, we can come in here and say, okay, we're going to be looking to do a $20,000 Roth conversion. Well, that's great. When we do a Roth conversion, that is essentially taking a $20,000 distribution from our IRA accounts and converting it to a Roth. Why is that important? Well, because when we take a distribution from IRA accounts, 401k accounts, what have you, that is considered an ordinary income, and that is a taxable event. So when we take $20,000 out, there is taxes due on that. So what we do is we load it up and we look at the 2022 scenario of this tax return compared to the 2023 Roth IRA conversion analysis that we're looking at. And what we do here is we just mimic everything we saw in 2022. We can also make adjustments based on if we know we're taking or, things are changing, we're earning more income, we're doing more distributions. We can change all this to kind of model it out to match it exactly. So if we go down here where it says other taxes, we can see what our tax liability is. So last year, there was a $40,000 IRA distribution, which you can see up top here. You can see here that last year, these clients took out $40,000. This year, we're saying we're taking out $40,000 again. But the difference between 2022 and our scenario here in 23 is we're also doing a $20,000 Roth conversion. And what does that mean? Well, what that means is when we go to our other taxes tab here, it's showing us that the total tax would be $7,996 as opposed to $4,992. So when we're doing our Roth conversion, our total difference in tax, if we're doing the same withholding of $5,250, which they did, is we would have an additional $2,746 tax bill due. So what that means is that if we converted $20,000, that would be an additional $2,700 of tax out of our pocket. So does it make sense to do the Roth conversion? Well, now we can say to you, okay, if we did this $20,000 Roth conversion, it's going to cost you an additional $2,700 in taxes. And we could also just keep playing around with it. So let's say, okay, we convert an additional $40,000 of a Roth. We go over here to other taxes and we say, okay, well, now our total tax went from $4,902 to $11,569, which would mean that we would have a difference of a tax bill of about $6,300. Another really popular scenario is let's get rid of the Roth conversion. So we just go here, do that, hit close, and we go here for IRA distribution. So let's say last year we took out $40,000. We want to do a couple trips, do some fun stuff. I want to take out $70,000 this year. What does that mean? No problem. Let's see what it means. We're going to do a $70,000 distribution. We're going to go to our other taxes tab here. So our total tax bill that we could say, okay, if we did a $70,000 distribution instead of a $40,000 distribution, how much additional tax? What is my tax bill? This is what's great about this. We can keep modeling different things to show you, and more importantly, to know what to expect and how to plan. So last year we did a $40,000 distribution, and our total tax for our tax return was $4,902. If we do an additional $30,000, it's bringing our tax bill from $4,902 to $9,196. Does it make sense to take out the additional $30,000? That's the conversation we can have. Well, there you have it. That's what it's like to be a client of ours. That's our tax distribution planning project. This is what it looks like for our Focus on Retirement Blueprint Plan clients and our full service clients. This is what we do. Until next time, see ya.